We're talking all things to do with Ethereum, one of the most popular coins besides Bitcoin. Joining me today to discuss this is Brian Norton, COO of MyEtherWallet. Brian, it's your first time on the show. Welcome to Kitco.
Thank you. It's a pleasure to be here.
Brian, before we talk about MyEtherWallet and your platform, let's talk about the use cases of Ethereum for those of us who may not be familiar with the technology. Can you, just in layman terms, describe the technology behind Ethereum, why it was created, and what the major use cases are today?
Sure. So those of your viewers who kind of understand what Bitcoin is, Bitcoin was designed for the purposes of transferring Bitcoin. The Ethereum project was designed more for the creation of building applications, building a technological ecosystem on top of it, beyond simple value transfer. So Ethereum works with something called smart contracts, which some of your viewers may be familiar with. And these can power different types of applications, such as popular DeFi applications. DeFi applications are it's short for decentralized finance. And this allows people to interact with financial primitives in a trustless and permissionless way on the Ethereum network. So Ethereum as an asset class, as an asset itself, is actually used to power these interactions on the Ethereum network. So the asset is actually used something like a fuel in order to power transactions, whether those transactions be in the Ethereum itself or in these other assets that are built on top of Ethereum. So that's kind of what we've seen over the last year, is this sort of explosion in decentralized finance, and that has driven new investors to purchasing the native assets so they can power those applications.
Okay, Brian, can you elucidate on some of these DeFi products that we're seeing emerge? So, for example, I spoke to an exchange recently, and they're offering these yields on DeFi products. So these yield products are pretty interesting to me. Can you talk about this new trend that we're seeing?
Okay, of course. So many of so there's different types of DeFi products that are available on Ethereum. Automated market makers, lending and borrowing protocols. These protocols work in a way where they work with liquidity pools. Users often contribute assets to these liquidity pools in exchange for an interest-bearing token. So they earn interest on their contributions. In addition to that, the yield farming was sort of introduced this year, which is an interesting additional way of seeking yield on Ethereum, in which governance tokens are issued to liquidity providers, and those tokens, while nominally don't having any monetary value, there is a great deal of demand for these tokens, and they've seen an increase in value in secondary markets. And what this allows you to do is they essentially vote on major changes to any of these DeFi protocols. And some of these are quite valuable because we've seen an exponential increase in DeFi engagement over the last year. Last year, just before this time in February, DeFi had about $1 billion of total value locked across the entire ecosystem. Now that's north of $12 billion, I believe. The last time I checked, it was north of $12 billion. So a small fraction of the overall financial market, but huge growth just in a short period of time.
Yeah. I wonder if any of this, what we've just discussed, has anything to do with Ethereum's price growth over the last 12 to 18 months. If you look at just a price chart here, Bitcoin has kind of taken the spotlight in 2020 as a huge growth instrument, but actually Ethereum has outperformed by several times. So why do you think this outperformance happened in the first place, Brian?
Well, I think that one of the things that we can kind of look where Bitcoin and Ethereum sit in the overall digital asset ecosystem is Bitcoin is primarily viewed as a store of value. Now, Ethereum, the asset, has a lot of store of value qualities to it, but it also serves to run the applications across the Ethereum network. So what we're kind of seeing is, and there was an article in CoinDesk just today about the interest of institutionals in Ethereum because they see this exponential growth in DeFi. And while perhaps wanting to hedge against the direct risks of those particular protocols, they acknowledge the incredible value that's added by these protocols. And so holding Ethereum itself, the native asset to power these transactions on the Ethereum network, serves as sort of a hedge against that risk, while benefiting from the greater demand for the Ethereum token because of the increased interest in DeFi.
Okay. Now, there was an article about an interview that you did recently in which you said that you're doubling down on Ethereum this year. Can you elaborate on what that means and why?
I think that we're just seeing the beginning of Ethereum's growth. With the launch of the Beacon chain in December, which is the first move towards Ethereum's move to a proof of stake network, we've seen incredible interest in people putting down Ethereum 32 ETH in order to stake on the Ethereum to Beacon chain. That shows an incredible amount of investor confidence in the long-term viability of the Ethereum blockchain. And because of the fact that overwhelmingly the developer community is behind Ethereum, the DeFi activity is on Ethereum, that we're only just beginning to see the start of long-term growth for this ecosystem.
Okay. Brian, as somebody who is probably interested in buying Ethereum or wants to invest in Ethereum, the way I look at it, and please correct me if I'm wrong, is that Ethereum is sort of an asset that has leverage to Bitcoin. So if Bitcoin goes up by 1%, Ethereum might go up by 2 to 3%. If it goes down by 1%, vice versa. So it has a higher beta. It's a higher beta instrument to Bitcoin. So if I'm bullish on Bitcoin and cryptocurrencies as a whole asset class, then I should be buying Ethereum as a leveraged play. Is that the correct way to look at this, you think?
I think that's one way of looking at it. I tend to steer away from looking at the assets as entirely tied. Overall market sentiment, that might show historically what overall market sentiment has been over the last year and a half. I think that when you get down to fundamentals, Bitcoin is a deflationary currency. That's what it's designed to do. Ethereum is a value generating currency. And so at some point, the valuation, the value being generated on Ethereum is going to break out from Bitcoin, and it's going to move independently. That isn't to say that there's not always going to be a correlation between the two. I can see that happening for a long time to come. But when evaluating Ethereum's long-term prospects, I think that people who are interested really need to look at the value being generated on the Ethereum blockchain through these other applications.
Okay. What do you mean by Bitcoin is a deflationary asset? What do you mean by that?
So Ethereum works on a capped supply. So at some point in the future, no more Bitcoin will be mined. And so it's designed to resist inflation, retain its value, and increase its value over time by the halvenings gradually reducing the distributed supply and eventually having no supply at all. Now that poses a long-term security question. after the last Bitcoin is mined, what's to incentivize people to secure the network, knowing that they will earn no more Bitcoin for mining it? So with Ethereum, it works on a minimum viable issuance model, which means to say the network only distributes or mints new Ethereum based on what is minimally viable to keep nodes incentivized to keep securing the network. And as we move to a proof of stake model, that will be distributed amongst independent validators who are staking Ethereum rather than mining it, doing strictly computational.
Yeah,
mining.
that leads to my next question, Brian. One of the things I've read about Ethereum and concerns that investors have is that Ethereum's supply is technically unlimited or infinite, and so that might be a worrisome value proposition as something that has unlimited supply theoretically should go down in value. First of all, is that a myth that it has infinite supply? And second, do you agree with that proposition?
So it is a myth. I think the term infinite supply is misleading. Like I said, it works on a minimal viable issuance, meaning that yes, it will continue to issue Ethereum tokens will still be issued as long as the Ethereum blockchain exists and is up and running. But its issuance will gradually decrease over the course of time. It will only issue enough to incentivize validators to continue to secure the network. So that ensures the long-term viability of Ethereum. So Ethereum's scarcity is actually driven by its use rather than its issuance. So what will drive the price up, what will drive demand up, is actual value creation on the network. The more things that are built on Ethereum, the more demand there will be for the supply of Ethereum, and as issuance drops over time, that the value of Ethereum as a token should increase. Obviously, it depends on our ability to continue viable development and to increase activity on the network.
So there is a theoretical cap, is what you're saying, to the supply.
Theoretically, there could be.
Okay, well, it's not a definite cap. It sounds like so. Maybe the demand supply fundamentals are different for Ethereum than for Bitcoin, right? Can you describe in layman terms the differences in the fundamentals?
Of course. So I think I touched on it a little bit. So value creation on Ethereum drives demand. So you need Ethereum to process any transaction on the Ethereum blockchain. That's what drives demand. Bitcoin doesn't have any inherent utility. So it requires that supply cap in order to retain its value. Without that, there's nothing inherent to Bitcoin that drives its demand. What drives demand on Ethereum is actual usage of the network for the building and executing transactions on these other applications.
Okay. So what technological innovations do you see being built on Ethereum going into the future? I think a few years ago, there was talk of a world computer being built on Ethereum and perhaps a new internet. That kind of fizzled out. First of all, what happened to that?
I think that, I don't think it's gone away, but I do think that at this stage in our development, we understand that we're definitely a ways out. But I think that what we're seeing now is a lot of innovations in terms of cross-chain composability. There's a lot of, alongside Ethereum, there's also Ethereum-based chains and side chains to do all sorts of introduce augmented functionality and increasing transaction throughput, so things move faster, cheaper with lower fees than on the Ethereum main chain. And so I think that what we're going to see is use cases popping up alongside other chains that are compatible with the Ethereum main chain that will allow new use cases to be introduced over the course of the next year. So I don't think that the world computer idea is entirely dead, but it's evolving to evolve these other cross-chain possibilities.
And just in relation to price now, given these technological developments that you foresee, what's a reasonable price that you think Ethereum could evolve into? We're seeing 1270, 1280 right now as we speak. What's next?
So typically speaking, I don't like to speculate on actual prices, but I do see. I think it's entirely reasonable for us to be seeing this price, double by mid-year. If demand continues the way it has.
Okay, Brian. Finally, why don't we talk a little bit about MyEtherWallet now? Can you tell us a bit about your platform?
Of course. So MyEtherWallet is a non-custodial wallet solution that allows users to interact with Ethereum-based applications such as DeFi applications while maintaining custody of their assets. We have a number of different products that allow users to do this. We have a web-based product, which is our flagship product that was launched in 2015, just about a month after Ethereum itself launched to mainnet. We have a fully fledged mobile app that interacts with the web and has augmented functionality with the web. And we also have a browser extension. So we really give a whole host of key management options for users who want to maintain their own funds and interact with these different applications in a trustless and permissionless and privacy-oriented way.
Very good. Brian, thanks so much for coming on the show. It's great speaking with you. I look forward to talking again.
Thank you so much for having me. Appreciate it.
And thank you for watching Kitco News. Stay tuned for more.